Gentleman's getting his jacket on.
We were getting mic'd up, so.
You look wonderful.
Thank you.
You look wonderful. Just a bit more about this panel. So my name is Jordan French. I'm a reporter at TheStreet.com. It's a big financial publication in New York. We're talking about trade finance. Our trade finance expert in-house is Malik Kotadia. Spent 14 years at Citigroup. Next up is Robinhood's Nadia Asoyan. Coming out. Welcome, Nadia. For those of you who haven't heard of Robinhood, based in the United States, disruptive and overtaking what we all know as the traditional financial brokerage, the kind of Legg Masons of the world, E-Trade, Scottrade, and the like. And we'll be unpacking that from her shortly. Cal Evans is with us. He is a lawyer based in the UK and consults in California. Max Kortrakul is with us as well with Carbonium, the dominant Thai trading platform. Welcome, Max. And last but not least, with Open Ledger, Mr. Boesing is with us today.
Okay.
Great, thanks. I want to get started. One important topic I want to talk about, Nadia, really quickly. For those of you who don't know, Nadia has a particular expertise. She's done a lot of interesting things in her life. One thing that we talked about backstage, unrelated necessarily to blockchain, unless it could be, but Nadia, tell us, speed walking is something you have an expertise in. Is that right?
Back in the days, yes. I used to be a professional speed walker when I was a teenager. And yeah, I'm holding a status of Russia's champion among 14 to 16-year-old.
And it's Olympic sport today, speed walking. So, Nadia, it's something that's wonderful, and I think it's something that we definitely would want to see you do at some point. I always thought I walked fast, but I certainly know that you would probably be one to beat us. So let's jump right in, everyone. One place I really want to start, a few of you operate, Max and Nadia with Robinhood, you operate legacy equity trading platforms. There's great businesses. They've grown so fast. Now here today, we're talking about blockchain and cryptocurrency. Why bother to wade into that space at all, Max?
Actually, it came from a lot of our users. Just keep asking because the trend is coming, right? We saw it like 2 years ago that like a lot of things happening. And also one of like our lead investor is from Japan. So they push us a lot to explore whether we should jump in or not. And then it's been confirmed by a lot more users. I keep asking why don't we just do like what we exactly doing for equity, but for the cryptocurrency. And of course, where the customer are, we need to be there. So that is a very simple one.
So you see the growth in the future in the cryptocurrency markets from a trading perspective?
It's actually growing like crazy because of course, we need to understand that it because of speculation also, not only like fundamental part, both part itself just make like momentum itself going up and up and up. And what we see not only from equity market, but FX market itself. I've been to like a Hong Kong trade show for the FX. Half of the fair is already become a crypto fair. Even the expo is still FX expo. So we see it from everywhere, from every angle that's coming to us. So that's why we decide to move to the cryptocurrency, to add the new cryptocurrency into the platform.
And that audience you referred to, just to unpack that a bit more, you have 5 million people, largely in Thailand on your platform.
Yep.
And just so we know, what percentage are trading cryptocurrencies?
Actually, it's very hard to detect the numbers right now.
Yep.
Because we get a lot of requests from the users, but the model itself is still scattering. So it's very hard to track which one is already coming in. But our support team just get a lot of requests to get into the crypto. And of course, that 5 million users is only in Thailand. So with the platform itself, with the equity market, there is a lot of regulation, a lot of integration in among all those different countries. So what we see in the crypto world is actually there is no concept of the country anymore. So that is something that very excites us, and that's why we are here.
And Nadia, have you seen the same? Again, you have a great business at Robinhood in the equity market space. Why bother with crypto at all?
Yeah, sure. So Robinhood operates in the US only, and I think the mission of the company is kind of well known across the world, which is to democratize America's financial system. And we believe that we should be providing all types of investing tools to our traders. And cryptocurrencies is obviously picking up a lot. And as similar to another company, we got a lot of actually asks from our customers for offering such opportunity to other traders. As well, actually, in the US market, the competition is not massive and it's pretty expensive. So we wanted to offer the financial tool to our traders where it's commission-free and it's crypto trading to continue the mission, as well as to make sure that we are offering something that's pretty trendy now, and we don't know exactly where the cryptocurrency trading will end up, but if it will become successful longer term, we want to make sure that we're leading the trend.
And Robinhood's known for offering free trades, notorious for that, in fact, put some heat on kind of legacy brokerages. Just to be clear, you're offering free trades in cryptocurrency as well?
That's correct. It's commission-free, and we don't have any charges related to crypto trading, as well as to any other trades that we offer, which is stock and options.
Okay, and so I want to open up to Open Ledger. Ronny, you're the new entrant in this space in some ways, in terms of not having a legacy equity markets foundation. But one of the things that you do is operate a bit differently than this sort of centralized and partly decentralized platforms that Max and Nadia run. You have a term to add a definition to our vernacular to describe what Open Ledger is. Can you tell us about that?
Well, Open Ledger offers an end-to-end decentralized user platform, or decentralized trading platform, DTP, in fact. And it allows every single user to be the owner of their private keys, unlike centralized exchanges. And of course, taking it back to what you said before, even in regards to whether you could see the transactions that are happening, well, in the decentralized trading platform, you can, in fact, see everything happening. So there is, whether you like it or not, everything is clear from the moment you start trading. And that, I think, your own private keys and the transparency, the privacy, and the speed even on this decentralized trading platform are really some factors that will probably allow the decentralized trading platform to become I believe personally, the number one way of offering trading, trading in future in general.
Right, certainly. So let's talk about that from a really high level. Some of the advantages. Malik, you're an expert in fund flows, in international finance, even broadly, more outside of these trading platforms. Are you getting feedback from clients and your audience on the value of implementing systems like these?
So I'll answer that in two parts. And just to clarify, our audience or our clientele is largely the governments and regulators in emerging markets. So their perspectives are a bit different. And you know, anything that you talk about in terms of digitization, digital transformation, blockchain, et cetera, has to sync with the larger objective of financial and social inclusion, which is the pressing need. And we've all heard that statistic again and again, right? The 2 billion adults in the world, about 2/3 of them in emerging Asia and emerging Africa are essentially unbanked. So that's the kind of problem statement that we are defining in the context of the emerging markets. And within that, if you look at fund flow, and what is the opportunity when it comes to blockchain, certainly governments and regulators in these markets, across South Asia, Southeast Asia, even parts of North Asia, and a bit of Sub-Saharan Africa, are very supportive when it comes to exploring or implementing blockchain solutions for fund flows, whether it is in terms of micro remittances, whether it is in terms of inculcating savings habits for these unbanked or underbanked users, and therefore, leveraging decentralized trading platforms to bring large swaths of people who were never even in the fiat ecosystem, so to speak. How can you make them inclusive in the financial system, or models like peer-to-peer or alternative lending, and what role blockchain can play in that? So from that perspective, certainly governments and regulators are more than open-minded, and in fact, it was a revelation to me and us, because I spent, as Jordan said, a large part of my career as a banker, and when you are a banker, you see the regulators in a very different light, right? You see them as cops, you see them as people who are perpetually hammering you and saying, do this, don't do this, implement this, blah, blah, blah. But in the last 2 years in my new hat, we've seen a very different side of regulators, which is really enablers of the ecosystem. If you bring in technology solutions, disruptive solutions, which align with the national interests or the social imperatives of those societies, then they are more than open. And this has been my experience in interacting with regulators across markets. So it's not just that there's one particular market in Asia or Africa which is thinking like this. They tend to learn from each other a lot and exchange notes.
And just a quick follow-up on that. We were talking backstage about some of the opportunities in emerging markets. And there are some analogies, for example, a whole continent's Africa, for example, being able to leapfrog a lot of very expensive telecom infrastructure in their space. And is it fair to say that blockchain offers certain emerging economies an opportunity to bypass what otherwise might be some very expensive financial infrastructure?
That's an excellent question, and I'm glad you brought it up. I think at all such events, this example of M-Pesa is always quoted in the context of Kenya and how it became a model. In fact, there was a similar model in the Philippines as well for many, many years in the form of GCash and smart money. So you are absolutely right. Or if you see the market like China, which was essentially a cash-based economy, and the Alipays and the WeChats of the world completely transformed it. So the opportunity in these emerging markets, whether you look at India, China, or even Southeast Asia as a large segment, is really because there is this large portion, about 70% of these markets includes customers who are not in the mainstream financial system. So this whole conflict or this whole dichotomy between fiat and crypto that experts like us on this stage keep debating about is a non-existent question in those markets. For them, the governments and regulators are simply trying to get people enabled onto the financial ecosystem, and that means overcoming certain challenges, enabling people with an identity to ensure that KYC can be done, enabling people or leveraging solutions like blockchain and AI to ensure that you can have some sort of a credit modeling or alternative credit modeling system, enabling lending solutions which can work profitably at those low volumes, enabling community savings models through blockchain. Rosca is a classic example in those kinds of markets. So it kind of goes across the entire value chain of the financial ecosystem. And it's a very exciting time to be in an emerging market because, as you rightly said, you can just leapfrog the many layers and come up with probably the best possible solution, as India did with Aadhaar, for example.
In humility, it wasn't my question. You gave a lot of the elements to me, so kudos to you. And I do want to bring you into this, Cal. You're a lawyer. Malik just talked about regulation, and his relations seem to be rather friendly. In contrast, a lot of blockchain-based companies that have offered a cryptocurrency out in the market through an ICO or other means have found some antagonism with regulators out there. As a lawyer, you're consulting certainly in the United Kingdom, in the US. What is going through regulators' heads right now, Cal?
That's kind of the million-dollar question, right? Or depending on the size of your raise, the multi-million-dollar question. I guess it comes down to this. We're in uncharted territory, and regulators are relying on a combination of either very old laws or laws that have been rushed together very quickly. And we know from history that laws that are rushed together very quickly inherently don't do what they should be doing, and the laws that are already written aren't written for the purpose that they're there for. So if we look at some jurisdictions that are taking the lead with this, if we look at Malta, Switzerland, They're preparing legislation and laws now to carve out their niche within the cryptocurrency and blockchain markets. We look at, like the United States, they're still relying on the Securities Act that was written years ago before anybody could have foreseen cryptocurrencies or blockchain as a technology set coming about. So what regulators are doing is, at the moment, they're utilizing information from different sources. And that's why we are very vocal in the industry as well. And it's very important what we do here as a community, because we need to partly educate them and partly inform them as to what the power of blockchain is and crypto is, but also twinning with that, help them create sustainable and realistic laws to manage it. So to go back to your question, what are they doing? At the moment, they're kind of doing what they can within their regulatory framework that they're given. And of course, whereas this is such a diverse, multifaceted, global situation, we're seeing different things from different regulators in different jurisdictions.
And thanks for that, Cal. To Ronny, on a similar question, so you're operating globally. So in a lot of ways, you're adjacent to or need to address compliance issues really everywhere. How are you doing that?
Well, I think that when you operate a decentralized trading platform where every single user owns their own private keys, it is by definition also kind of saying, welcome to the world. I mean, and it's only really the complicated user experience, or really how to build a user experience on the decentralized platform that is the challenge at the moment. From that on, you could say that it's not me who's really deciding from where in the country they're coming. I can do that on the base of marketing, features, etc., but it's decentralized, mind you. So it's I'd say, it's kind of undergoing that financial, or the legal frameworks of every single country. The moment you start actually wishing to leave it and go into fiat, etc., that's the time when this decentralized trading platform suddenly becomes under the scrutiny of every single country in the world. And we are, of course, preparing for that, but it is interesting to operate out of a country like Denmark, for instance, where you don't have the same legal framework as mostly any other country in the world. I mean, you don't need a license, for instance, to be a broker between crypto and fiat, unlike probably most countries in the world at the moment. And that's one of our advantages, operating a decentralized trading platform.
And that might work in Denmark, but to the global nature of your client base, those who can and do trade on the platform, and it's roughly 250,000, you were saying earlier, they're using a certain technology. You said there's an intermediary between what you do and then the relationship to fiat, BitShares. Why is that intermediary there? Why use BitShares as the trading platform to make this decentralized?
I think if you look at this whole solution session that we have here, blockchain and trade finance, if you say blockchain, crypto, and then adding owner of your private keys, then you have this decentralized solution that we're talking about here. And I think that's that's the unique part of what we're offering. When you enter with the fiat, or let's back up and say the technology which using this trading platform is actually BitShares and graphene blockchain technology. And there is no third party involved in that blockchain and financial trading platform that we're talking. But once we enter with any of these gateways that we know on all exchanges worldwide, Bitcoin, Ethereum, Dash, whatever, then you need some kind of gateway to access this decentralized platform. That's where we come in as a service provider. And we are adding the crypto at the moment and also the fiat as we go now. So that's where we start entering into this challenge of dealing with regulators worldwide. that moment. Because you could say there's nobody who could actually go in and pinpoint and say one user is from whichever country. Every single user on this blockchain of BitShares, every single one has a unique username, not even an address. I mean, we know Bitcoin with an address. We know basically everybody has an address in the blockchain sphere, except from BitShares and a few others. And you are basically trading across nations with name to name using this unique blockchain. And of course, it happens within seconds. Mind you, this whole blockchain has been established since October 2015, and perhaps the only fully functional financial trading platform that you do have here as a decentralized structure. 1,000 or 1.5 million transactions per day, 25 million blocks is what this blockchain has already produced. It's more than any other blockchain existing at the moment. So that kind of just underlying the strength of this one.
Sure, and then also backstage, so just to deconstruct this for everyone, you're not touching the fiat. It's decentralized. It's between the peers that the trading happens, so you're providing the platform to them. But one of the other things that you're saying is when you do touch the fiat, you do plan to register with various regulatory bodies globally at some time in the future, and it's that condition that will warrant you to do that. Is that right?
When you suddenly introduce this point, fiat to crypto, crypto to fiat, you are bound to enter into some regulatory environment. And of course, when you operate out of Denmark, you could say, we don't know, well, we do know the moment that they register and validate themselves, we then know, of course, the nationality of these people. They are, however, they are operating under the legal framework of Denmark when we are then doing the brokerage. And of course, in future, there might well be some issues there where you say, okay, well, you are selling to somebody in this country, but I mean, they need to know, of course, first, because we are dealing, there's also something called client user privilege. So it's not like we go out and tell the world which nation that we are dealing with. On the decentralized platform, everybody is the same. They have a name picked by themselves, and most of them really don't want the neighbor to know what they're doing. So of course, they're not putting their own name as account.
Sounds like it might spell trouble for the current crypto exchanges, but over to you, Nadia, on a similar topic. You're defined as a brokerage now, yet a host of very, let's say, well-worn road of regulatory environment on the equity side. What are some of the things you had to wrestle with from a regulatory standpoint in order to be able to let your clients trade Ether and Bitcoin?
Yeah, sure. So currently, our company is set up as money business services company with FinCEN, and that's for the crypto side of the business. And we have to make sure to comply with every state's MTL, money transmitter licenses. So each state has different requirements in the US, and we have to be approved by each state. And as well as we have to make sure that we comply with Bank Sensory Act. That's also for crypto entities in the US, but we are not a crypto broker dealer of any kind. We're actually registered as a money services business, and you have to be approved by FinCEN.
Okay, so that designation you're saying is what cordons you off for now. Is that right?
Yes.
Okay. I want to turn topics a little bit for the whole panel on kind of the next growth stage, and that's with kind of the options and futures market. Malik, one thing we were talking about earlier from a much broader, again, trade finance level is that you didn't necessarily see the same appetite for cryptocurrency, certainly trading, as there is on the retail side. Why is that?
So I actually want to take a step back and maybe take a couple of minutes to touch upon the theme of this particular panel, which is on trade finance, and then I'll kind of dovetail into why there are these challenges. So essentially, most of us know that global trade is a $20 billion opportunity, and 8 billion of that is basically open trade, right? And the rest is through instruments like letters of credit, et cetera. And there's a $2 billion credit gap even today in the market, despite all the advancements we've made in global trade. And let's look at the root causes of it. I mean, as I said, I've spent most of my life as a banker, and it's not that we didn't do this because we wanted to let go of a $2 trillion, I'm sorry, it's a $20 trillion, $2 trillion opportunity. It's because the economics of that with SMEs and other small businesses didn't really work out when you're dealing with thousands of letters of credit and bills of lading, et cetera. So that's really the problem statement. It's about the cost of operations, one. It's about the cost of credit, two. And it's about the cost of managing risk and fraud, three. So these are the three core problem statements if you really get down to the root causes. Now let's look at what blockchain and crypto can do in this space. And if you really break it down, it can solve for each of these three in a very efficient way. And that's where you see banking consortiums like WeTrade coming up in the EU or similar consortiums being discussed amongst governments. And we are working on a couple of projects in emerging Asia as well. So that's really where the appetite and the focus is to remove these so-called barriers of inefficiency which existed because the legacy systems could simply not work in an economically efficient fashion. Now, when it comes to the deepening of the markets, the crypto markets, and when it comes to futures and options, certainly that is where the bridge between the retail markets and the fund flows will come into trade finance. And that is what we are waiting for, we are hoping for. It's not that there isn't appetite in the emerging markets for crypto trading. In fact, I was just speaking at an event in Vietnam a couple of months back, and I was surprised to note the numbers. There are some 5 million plus, similarly in Thailand, similarly in the Philippines. Millions of people are getting into it, but the fact of the matter is regulators are careful and wary because education is still a challenge in these markets. Volatility, of course, as we all know, is a crazy thing. And the regulators are more concerned about systemic stability and ensuring that 2008 doesn't happen. I was in the midst of all of that in banking when it happened, and so many people lost their shirts of $700 billion global collapse. So those are the things that they're trying to avoid. And the moment we start getting into futures and options and there is a maturing of that ecosystem, I think all of these problems will start coming down. Price volatility will come down. Price volatility coming down, along with stable coins, means cryptos can suddenly become a tool for trade finance. Today, I mean, how do you expect people to trade hundreds of billions or tens of billions of dollars of trade between counterparties with an instrument which is itself so volatile in nature, right? So all of these developments over the next maybe 2 or 3 years will lead to something which is currently seen as a pure play B2C solution becoming a B2B preferred solution as well.
And certainly, thanks for that, Malik. On the note of the experts from the trading side, one thing that you've established really well is that, at least evolutionarily, retail investors are acting upstream in a volatile market to potentially make a much broader market that what you're saying is eventually will come as an instrument for commercial trade, and it's a much, much bigger market.
And let me, if I may just add, there is currently interest. In fact, I was just chatting, and in fact, we were having a discussion at Asian Development Bank about 3 weeks back. So there is interest in all of these instruments, but the questions remain, as I said, about volatility, about the lack of liquidity. Once we start overcoming those, and of course, I know there is no magic wand, it'll have to be a process, but once we get to that stage, then there is certainly a lot of institutional and government openness. So I just wanted to reiterate that point, that it's not that multilateral agencies or governments are only wearing the hat of no. No, they are saying we are open to all sorts of innovations which help deepen the market and align with our national and social imperatives. I think that's what we have to bear in mind.
Certainly, and thanks for adding that. Nadia, in the evolution for your company's approach, going from equities and then expanding the trading lines to cryptocurrencies, you told me earlier you don't yet offer options and futures. Why not?
So we don't offer options and features on crypto trading. We do on traditional securities. It just 3 months ago, we launched crypto trading itself, and cryptocurrencies is the first logical step. And Our business just started out, so I think it could be something down the road. We just don't offer it today. I do think it's a great opportunity for us to explore for sure down the road.
And Max, you've explored a number of lines. You've evolved your business quite a bit. Obviously, for a number of years, you operate in the time market on the equity side. You've been expanded to, on the cryptocurrency side, I think you said about 60 cryptocurrencies that you offer. Where are we in terms of allowing retail and institutional investors to help form a futures and options market in Thailand?
For the Thailand itself, they just announced a new crypto law, the Crypto Act. Every single business that related to crypto need to be registered. So everything just put on the ground right now. So of course, there is a lot more paperwork. There is a lot more thing to be done. But the good side is everything is legal right now. They basically have like digital asset law in Thailand. And what we believe in longer term, it's just like normal finance industry that you got like every single like unit that can help all those capital market getting going. So I do believe that the crypto world is still restarting, and there is like a lot more to be done until it mature. And what we see in the Southeast Asia region, they all try to like basically come up with some law and regulation, and no one know it yet, understand it yet, that what is the best way. So all of them are trying to do the same thing, try to like announce something first and then like shape it later. Maybe this is like the first era that the government and regulator work more like a startup than ever before. And of course, we cannot use like legacy regulation to control what we are doing right now, because you know, like blockchain and crypto is like decentralized from day one. If we try to like centralize by controlling it by SEC, it sounds like a bit of like not understanding all those things that going on. So I think the balance way in the future, it should be like try to learn from each other, talk from each other more and more. And I think the concept of the country itself will be less and less, and it will be more democratized for all those like countries, all those like retail or even institutional, because if everything is mature, so a lot more players will coming in. And of course, that is the real game for like the future of all those like trading industry.
Interesting. So in some ways, Thailand's maybe a leading indicator due to its size and the evolution, in part, that you've contributed to its market. Cal, as a lawyer, working and consulting in the UK, certainly consulting in the United States, those are both very mature, at least relatively regulatory frameworks, on an equity side, on a commodities and futures trading side as well. To Max's point, to what degree do you see analogies between these very developed, calcified regulatory frameworks and this new entrant for regulators to wrestle with, that is cryptocurrency trading?
Yeah, great question. I mean, we operate very jurisdictionally agnostic, which is great because of how the crypto market inherently is. I think the important point that has to be raised here is that what we're all discussing is the secondary market. So what we see is regulators are grappling with the situation on two fronts: the primary market, which we know is the ICOs, airdrops, however you choose to get tokens out to the public. And we're talking about the secondary market. And that is, in and of itself, probably the singular most regulated industry on the planet, probably outside of healthcare. And so what we see with the kind of legacy governments against the newer guys is that there seems to be a level of flexibility with the newer guys. Because what's happening is the smaller jurisdictions, we take Europe as a great example, we see the smaller jurisdictions have more flexibility to amend their laws relatively quickly, which is why we're seeing the prevalence of countries like Estonia and Liechtenstein, smaller countries that have the ability to move and shape their laws relatively quickly to capitalize on this new market. The legacy countries, if we call them that, like the United Kingdom, like the United States of America, or if we, to degree, look at Germany or France, they move inherently slower when it comes to the actual regulatory framework of the secondary market because their laws are very enshrined. There's entire industries backing this. If you were to introduce a new licensing regulation, a new standard, it would have an incredible domino effect. We're talking about, the 5th, 7th, and 10th largest economies in the world against guys that are much larger down. So what it's actually doing is, for the first time in a long time, it's actually creating a level playing field. And so the guys that have the flexibility to move quicker are attracting the newer participants, especially in the secondary market, which is why we see after a lot of ICOs, there are a lot of strategic movements. So folks may ICO in an offshore jurisdiction out in the Bahamas, and then they may decide to re-domicile back within the European Union, within one of these jurisdictions that has secondary market friendlier legislation.
Yeah, it still begs the question, though, Cal, and this one goes to you, Ronny. You're operating globally. You're seeing these markets develop from a third-party point of view, as a decentralized trading platform, a DTP, as you termed it earlier. Is that arbitrage opportunity across regulatory schemes real, or is that a myth that we'll just catch up with anyone who tries to take advantage of it?
The arbitrage, you mean?
Yes, the regulatory arbitrage that Cal just identified.
I mean, if we talk about the entire trading that we see happening at the moment, where I would estimate probably 80 to 85% of all this volume is based on pure bot activity on the different exchanges. I mean bot, yeah? So automated trading, putting up orders, sell and buy, and then activating whichever way that trader who is putting up decides. I think you would never be able to see that on a decentralized platform in the same way, at least, because there you would see what's happening. You have it physically. I wanted to add one thing before, also, that you have, when we go in and speak cryptocurrency trading all over, I would think that it's much more clear to say the asset of these cryptocurrencies are being traded, because it's not the cryptocurrencies we're trading. It's actually something that a third-party provider is telling the user is the cryptocurrency. But in fact, it's just a mere asset. So at this point, you could say when you're operating a decentralized platform, you're putting it to the the end user to operate. Everything is transparent. When you have a third party operating on an exchange, you're suddenly closing in and making it less transparent when it comes to arbitrage, etc. Yeah?
It certainly sounds to be a complicated market, and that uncertainty in the system speaks to institutional investing. The last two questions I want to go to Max and Nadia with. Max, let's talk about that. You've had a developed market. You have 5 million users in Thailand on your platform. Where and to what extent are institutional investors interested?
I think whenever they everything is more mature, they're gonna have a lot more people join the party. And for our retail investor, actually Thailand is a very special country for the retail investment, because half of our trade volume is actually from the retail investor. Even the market is very, very small, because people trade a lot more. So whenever they see the cryptocurrency market is getting bigger and bigger by the retail investor, of course, their company or institutional, they're gonna jump in to maybe have a bigger party. And I think when the time comes, it's gonna be everything will be a lot more mature. At least regulation and everything need to settle down, because all of them, most of them are not they got their LP, they got a lot of things that need to follow all the regulation. So we do believe that this is just very first step of all the trading. And we do believe that there is a lot more to be done until it matures.
Nadia, same question to you at Robinhood. A lot of success with a big trading platform. Where are the institutional investors for you?
So if we would speak about Robinhood specifically, we actually don't work with institutional investors and we don't see any using our platform. Majority of our users, it's a very interesting fact, 50% of our consumers are actually first-time investors in their life. So it's the first platform that they used for investments. Could be crypto trading, could be stock equities. And we don't actually have any institutional investors involved, unlike some other US platforms, which actually support institutional investors.
Well, thanks everyone. I appreciate it. I had a pleasure hosting this panel on trade finance or trade finance experts or trading finance experts that have joined us. Thanks again. Hope you enjoyed it and found it informative.
Thank you.
Thank you.
Thank you.
So, thank you, Jordan. Thank you for all speakers. Thank you very much.